Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where you get everything you need to know in 90 seconds at 9 o'clock. With news, there are no surprises from the US Central Bank. The US Federal Reserve delivered its well-signalled 0.25% rate increase today, as expected. It is now 1% at the upper bound. Their dot point guidance now shows they expect 3 increases in 2017, including today's one. They plot another 3 rises in 2018 and more in 2019, taking their policy rate then to 3%. They're showing heightened concern about inflation risks, a sudden new exposure for policymakers who have been more concerned about employment levels for the past decade. The Fed has yet to start winding back the quantitative easing money they have poured into the financial markets, however. Recall, American QE ended in October 2014 after the tap added $4.5 trillion into the system over 6 years, or an annual average rate of 4.4% of annual GDP over that time. American consumer inflation is now up to 2.7% in February, according to data out today. That puts the official benchmark rate deep in negative territory in real terms. It also undermines real earnings growth. Across the Atlantic, the Dutch are voting in a key election. The early turnout is sharply higher than their last election in 2012 as immigration and the economy dominate the contest. Results will start to be known in mid-afternoon New Zealand time, although it could be a cliffhanger. In Chile, all the other signatories of the TPP met earlier today and vowed to push ahead without the US. In Australia, analysts are warning that property investors face significant interest rate risk in the immediate future. While rate premiums on loans to them and interest-only loans have started, JP Morgan analysts say that much more is to come, perhaps as much as 3% more. Sydney is where the largest risks exist. And staying in Australia, ANZ and Westpac have both entered into enforceable undertakings with ASIC, following the regulator's probe into spot foreign exchange trading between January 2008 and June 2013. ANZ said it accepts that its supervision and monitoring of spot FX business weren't good enough, and has taken responsibility and apologises. Interestingly, ASIC's statement thanks New Zealand's FMA, among others, for assistance in dealing with both banks. In New York, the US Treasury 10-year yield slipped to 2.58% before the Fed announcement and then fell to 2.54%. Oil prices are up $1 today, now just over $48.50 from the US benchmark, while the Brent benchmark is just on $51.50 a barrel. The gold price is also up $6 on the Fed decision to $1,210 an ounce. And the New Zealand dollar was marginally firmer at 69.6 US cents prior to the Fed announcement, and then jumped to over 70 US cents. On the cross rates, the Kiwi dollar is at 91.5 Aussie cents, and against the euro, 65.5 euro cents. The TWI is at 75.4 now. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.